Welcome back to Ferocious Education. This is Ed. Today we're going to be talking about HEPA, Hepion Pharmaceuticals. If you would like to know why this one might be worth 9 or even 10 times worth what it is right now, watch it to the end. Let's jump right into this one. So for this one here, I do want to cover a couple of things. First off, the presentation, and then we're going to move our way through the latest news and their valuation. So if we were to cover right now their presentation, this one was updated on January 2021. Their current need and opportunity is the NASH drug development. So NASH leads to cirrhosis, liver cancer, end-stage liver diseases, and death. And it's soon to be the lead reason for liver transplantation, now large cost to the healthcare system. Now, there's two parts of it, NAFLD and NASH. So the NASH, which is what they're going for, is the non-alcoholic hepatitis and a more severe form of NAFLD with inflammation and liver scarring. And they give you some details here and some actual information, including toxic lipids, cell death, inflammation, fibrosis, and liver cancer, including with also a smart strategy. Cyclophilin inhibitors reduced harmful processes that drive disease progression. And they go ahead and talk about their AI power. And for this, I do want to go towards their page. AI Power Platform provides integrative, multivariative system biology, bioinformatic, and big data analysis of proprietary preclinical and clinical data with publicly available multi-omic database to facilitate improved drug selections, clinical study design, and a priori responder analysis. And then they go over here, AI Power combines artificial intelligence, machine learning, and deep learning, even though deep learning is a part of machine learning is part of artificial intelligence, but okay. Artificial intelligence is employed to accomplish using computers a wide variety of tasks which formerly required human intelligence. And then next, machine learning. Algorithms are being trained to evaluate drug targets, patients, characteristics, and biomarkers to select right drug for the right patients. And then deep learning, information from shared data repositories is being combined with Hepion data to identify disease and patient-specific responsivity. So all that is something interesting. So we're going to move back towards the presentation. And on here, we did cover the AI power. We go ahead through their pipeline and we see that they are currently under the NASH in phase 2 with a projected NDA filing around 2025 to 2026. And then you got the COVID-19 pipeline, which is still in phase 1, going on perhaps to phase 2 and will proceed if externally funded. So I don't think this one will go ahead and proceed further, especially with finding vaccines and some bigger names advancing over. But it could be something else, for variants if the vaccine becomes ineffective. An HBV, which is open to partnerships. Separate phase 1 programs were not conducted for each separate indication. Phase 1 program was comprised of single and multiple ascending doses and a drug interaction study. And then we're going to go on for some of the PR that is expected. So the phase 2A for the NASH clinical program is ongoing and it's expected to complete in Q2 2021. And for phase 2B, the planning is to start on Q3 2021. So that's 2 PRs coming up that are very close and might actually see a really nice increase in terms of the stock price. Now for CRV431, there is an anticipation for complete additional clinical drug and drug interaction study in Q2 2021 and prepare for the NASH phase 2B to start in mid-2021. And for the AI power, continue to refine extended AI power for NASH and possible other indications, and continue to develop intellectual property for additional indications and business development strategy. And so some of the highlights that they had recently: oral once daily multimodal drug candidate CRV431 and clinical phase 2A is in progress with 2B planned to start in Q2 to Q3 2021, and a strong safety profile in preclinical phase 1 with a robust intellectual property all around the US, Europe, Australia, Canada, Japan, China, and Korea. With the cash currently as of from September, $13.7 million, and there was additional as well back in November, $34.5 million raised out of 23 million shares sold. So now we know a little bit of a perspective that they have. Their pipeline is a little bit limited. It's not an extensive pipeline as we would have liked to see. It's mainly CRV431 under the NASH/HBV part. And then we can take a look into the SEC filings. And some of the SEC filings, this one here, we get to see a little bit of information about NASH. Nothing significant there in a sense, but we're going to move on as well. We see a bit of public offering, more public offering information, and then their information about phase 2A, which was approved in December 29th for continuation. And so that is expected to complete on Q2 2021. Diamond mouse model is the latest in a string of non-clinical studies confirming the antifibrotic effect of Hepion Pharmaceuticals' lead drug. Now that is positive news, and that was just released on March 23rd, 2021. Now, in this study here, they do share more information. I believe this is coming from the 2A part. Although I don't think it will be the end results for 2A, it's still a continuation of the study. And they say that the result obtained with the diamond mouse experiment confirms once again that the CRV431 is a potential antifibrotic agent. And so that's a good thing there. We get to move on. Hepion Pharmaceuticals to present on CRV431 and AI Power at NASH Tag 2021. Now that happened back on March 11th to 13th, so if you were able to watch that video, you can find it. You'll probably see more information or a summary of that information that we're presenting in today nonetheless. And moving on as well, this is information for public offer and closing. And the reason why I'm referencing this one here is $82.1 million. Add that towards what the cash that they had before, 13.7, and then add it to 34.5, you're coming closer to 120 million. And so for that, we can go back towards their financials in the last quarter, and we can easily see under the total debt there is that your total debt is somewhere around 810,000. So they are way debt free. They have enough cash to keep them afloat. And just keep in mind that they are a market cap company with $144 million. So it is almost that they have more cash in hand than their market cap, roughly around there. It's almost similar. But here's where things get a lot interesting. Take a look into the statistics at the price over book, around 0.45. Now, at the SP 500 average is 4.32. And so if we take that 0.45 divided by 432, we're going to get 9.6. If you take the current price of 190, divide that or multiply that, by 9.6, you're going to get 1824. Now, there's a massive reason regarding onto this one's lack of price there is, for instance, or lack of movement of price, is that the statistics part, they are pre-revenue with one pipeline, which means, yes, they do have technically on the balance sheets enough capital in terms specifically cash as of now to carry them up, but comes into the question to, well, what about their sales, right? That is where the question goes on. They are pre-revenue, and so that is where the issue comes. And I'm going to go now towards institutional buyers, but before doing so, if you'd like to see more materials like this, make sure to subscribe and leave notifications on to this channel. And if you'd like to join our Discord server where you can ask me more questions, it's in the description below. Now, institutional buyers here seem to be still bullish and bearish. So for instance, you got Altium Capital Management. On the 24th of February, they have around 6% shares. 19th, Savvy Management around 6.50. 18th of February, around Empery Asset Management around 5.25. And it goes on. You get to see that 1, 2, 3, 4, 5, 6, 7 companies or institutional buyers investing into this one in the last 3 to 4 months. And institutional buyers seem to be still somewhat bullish and bearish onto this company. Now, Morgan Stanley even has a position in this back on 16th of February. So quite interesting there. And we're going to move on now towards the technical analysis point of view. Now, from technical analysis point of view, a lot of these are going to look either accumulation or more of bearish because the market has been sliding and it hasn't been nice to stocks like this one here. And so the only things that we can actually find out from this one here and get is probably the MACD going a bit more positive side, indicating that there is this continuous tug of this one trying to break out. So we need to take a look into specific supports and resistances. Now, on a one-day perspective, this thing is sliding, currently a negative on the MACD, indicating sideways movement based on indicators like the ADX at 12. So we need to see a little bit of the moving averages. And on the moving average bands here, what we get to see is this one is expected to trade 228 on the top, 207 in the middle, and 187 in the bottom. And the further on Bollinger Bands is between 238 and 177. Now, from the stochastic fast and stochastic slow, we're seeing that be careful for this one, it might actually go back to another support. And for this, we need to understand a little bit better where the support is. And so we're going to use Fibonacci retracements. We see a significant resistance at 229, 278, 317, 356, 411, and 482. When it comes towards supports, there's quite a limitation there to go ahead and select them. So the current support would probably be 183, followed by 170, followed by 151. So it's already, a big part of it is already bottomed out. I mean, there's 124 on the $1. But significant resistances here, there's a good amount of them. There's the 201. Above there, you're looking at 240. Above there, you're looking at 268. Above there, you're looking at 314. And then 335. 367, 441, and then jumping up to 451. Comes to the question to Ed, what do you think about this one? Well, a small stock or a small company with such a small market cap with enough cash that goes almost one-on-one, it sounds like a good time to buy. But the question comes in, well, is their entire eggs are in one basket? It's only in this one pipeline. And if they go through with it, things are going to look really good. And it's going to be a profitable company. There's a lot of institutional interest into this one. But if they actually flunk it, things can go south quickly. And that's a risk you're willing to take. What do you think about this ticker? Make sure to mention down in the comments below. Share, subscribe, and like. You have a wonderful day.